A warm welcome to all the panelists. I think we should straight away jump into the topic, radical reinvention. I think the market is really changing a lot, especially in terms of how the products are getting sold in the market and how the business lines are developing. Especially if I talk about one interesting figure, there was a time 5 years back or maybe a decade back where the entire general insurance industry was high on motor. Now, when you look at the motor numbers, it's drastically down in terms of overall market share. The health insurance is kind of almost reached to 41%, and it will reach even more. And the way the digital is picking up in India, I think there are a lot of changes which are happening, but at the same time, we also have to see how the profitability looks like, and that's where I think it'll be a very good discussion with all of you to really deep dive into all of these aspects. So, ma'am, I would start with you. What do you think about these, the transformative changes or the transformative forces which are in insurance industry and which is changing the due course of the business? And what do you see over a period of next 5 years? How things are going to change?
Yeah, the insurance industry is in throes of change, a lot of transformation, regulatory and otherwise, that have been going on for the last couple of years, and this will, going forward, impact the way we work in a big way. It is actually boom time for insurance, and also as India's economic stature rises, we see a lot of opportunities in the ecosystem for insurers. But the current challenges or the aspects of this transformation possibly could be the RBC, and the risk-based supervisory regimen that we are now going to adopt. This will bring in greater focus on the strengths for each of the insurers. They will definitely look at the kind of risk they are underwriting, the kind of investments they are making and what assets they are picking up, because this will definitely show up in their balance sheet, so there will be a closer monitoring of this. The IFRS, introduction of IFRS immediately in the next 2 years would definitely bring more transparency to all the stakeholders, as regards the business, and I'm sure that in all insurance companies, the KPIs across various verticals and departments would see a reflection of this. So it would be impacting even on the personal performance and goals that you would set for your employees. So one of the most important aspects that could affect us near future would be introduction of 100% FDI into this market, which would see a lot of foreign investments coming in and serious players coming in. So possibly we could see a more rational in pricing, and also uplift in the way in the service parameters. So this could set new benchmarks for the current operators and insurers, and who would have to definitely shore up to meet with them. So we see a very positive trend where this could bring in a lot of improvements in the current ecosystem, including in the pricing, so that sustenance becomes more easy for insurers. That is one. Then about, there's a digital transformation that is already underway with a lot of distribution happening in the digital space, AI-driven claim settlement, pricing, as well as fraud detection tools that have been enabled because of increased use of technology. So this surely would go up in a big way with alarming increase in the number of startups and fintechs, and it's very promising that if technology joins hands with insurance, then this could bring up a lot of cleanup in the kind of frauds that could operate. We could bring better value for customers at a given price, and this is a very positive aspect of what would happen in the next 5 to 10 years. Apart from this, I feel there would be an increased thrust on ESG initiatives, the environmental, social and governance aspects, where we would have to go forward and make products that would address the climate change issues. We would also be engineering our internal corporate governance and our investments in underwriting and investments which would be more around the climate centric initiatives of ESG. This would be definitely one of the things that you would see boards increasingly being turning towards. And last but not the least, I think we really need to see how to use these technologies effectively to bring in customer delight, to see that customers have ease of use, the Gen Z, their needs for having faster user accessibility and better experience in terms of pricing, in terms of service delivery, that those expectations insurers will have to meet if they have to survive in the next 5 to 10 years. Otherwise, insurance is a business where you are on a treadmill every day and you need to be at that speed every day in order to just survive. So that's the way it's going to be 5 to 10 years.
So I think the key three takeaways I take from your dialogue, ma'am. One was on the pricing, the second was on the technology, and third is about building this whole experience. And if I take a segue from this, especially on the pricing sub, since you are the one who are more closer to customers than any of the manufacturers sitting here, how do you see customer perception in terms of pricing today, especially for general insurance product which is health or motor? Do they see it's high? Do they see it's low? Are they see it apt? Where do you see? Because obviously we have one view of manufacturer side, which is that the pricing is not apt for this business to really sustain for long. What's your take on this?
So I think the first thing to understand before we dive into pricing is the nature of our industry. See, the nature of the industry is such that there is no organic demand for insurance. So nobody in the morning wakes up and says that today I'm going to buy insurance. So that is actually, if you ask me, the fundamental part from where this whole problem starts, right? Because where you're trying to go in terms of pricing or profitability, etc. So the first thing is that see, if you think about it, we are selling a very good product, right? We are selling a health insurance product. Let's say in India, you can go to any hospital you feel like. At any time, the claim will be paid or should be paid. There is a reimbursement, there is a cashless, all kinds of things are possible. This product actually is unique in the whole world. Like if you see in the developed countries, these products are extremely restrictive. You have to go to networks, there's a co-pay, there will be a payment for this, for that. So actually we have a wonderful product. So the question we must ask ourselves is, with this wonderful product, why are we not able to sell? Why is there no organic demand? And that's when you start answering that question, then I think some of these pricing and all these issues will start to come out. So the fundamental challenge is that despite doing this, there is very little trust that the claim will be paid. Right? I don't want to go into the statistics which are published every year by the regulator, but if you see the statistics, you will understand the problem. That the customer, and it's not just a perception. See, sometimes in the industry, we all like to believe that it's a perception problem and it's not the reality. Unfortunately, it is the reality. So when you have that issue of those few people who are buying insurance, they are also not getting a great experience, that makes for a terrible story, right? And that's the real issue which we have to break. We have to break this cycle of people buying something and they are not being able to use it or not being satisfied with it. Now, as far as pricing is concerned, I think in India, in every industry that you see, any industry that has scaled in India has scaled at a price point which is different than the global price point. Whether you look at telecom, whether you want to look at FMCG, you want to look at pizza, I mean anything, you can pick your industry. It is normally at a price point which is considered crazy. And the only way that it can work is that you have to reverse engineer yourself. Like, what did Jio do, right? Before Jio, we believed that data had to be sold at a certain price. Now, they came and crashed the price by 80%, 90%. And now, look, 5 years later, we are all there. Data is being sold. Telecom companies exist. It's fine. So, I think the answer is going to be in that same thing. We have to reduce our costs. We have to bring down the level of service. And we have to, like I said, create demand for our product. Because I don't think that you can scale an industry where the product demand is not there. Whatever else be the other characteristics. Yeah.
Mike, I wanted to hear your thoughts on the same question of pricing. I think what Sarab has described is that maybe we have to really look at the pricing. What's your view? Or it will be more a manufacturer view than anything else.
So your question is, what's the manufacturer view on the pricing in health insurance?
Yeah, what I hear is that, I mean, if I hear is correct, that probably we have to relook at the pricing in a manner where we lower our services and make it more restrictive, and then only we can sustain these. Or there's another way when we increase the pricing and keep the service level same.
Yeah, I think it's not, my view is it's not as simplistic a topic of whether pricing is right or wrong. I think there are many other variables that come into play before one can kind of come to any conclusion on pricing is good or bad, right? I think the context is pricing for what? Pricing for what benefit? Pricing for what the consumer is expecting to get from the offering. Pricing for what actually was the sales that was done in terms of the benefit that was explained to the customer. So I think we have to look at that in the context of all of these factors. Now, there are segments where, and how is finally pricing, how do you come to the conclusion whether pricing was right or wrong? The final answer is, let's say the benefit which was promised to be given to the consumer, they are fully given in the shape and form and the experience that the consumer expected it. And post that, how does the economics of the product looks like, right? So if today the fact is that when you look at the entire industry, very few companies are making underwriting profit, operating profit, right? Which means that there is, if you look at this number alone, then it seems that the pricing is probably inadequate. On the other hand, Sarbvir mentioned that there is a concern, and his assessment is that from having spoken to very large mass of consumers that Policybazaar speaks to, that there is a real problem of how the consumers experience the benefit. As a manufacturer, I mean, I agree, but there's also a slightly counter view to that. But that's a topic of very detailed conversation. I'm going to get into the detail, but there are aspects of what is happening in the let's say healthcare ecosystem that in terms of how the benefits are experienced, in terms of how the pricing is experienced. For example, today medical inflation in India is 14%. If any health insurer increases the price by 8-10%, it is seen as a very large increase. Finally, what are we? We are a pass-through for healthcare cost, effectively. We are the funders of healthcare costs. So whatever is the healthcare cost, we fund that cost. We can bring in some level of efficiency, I agree. But finally, what is happening in the healthcare and industry space is what will actually be reflected in our pricing. So if our products will not be keeping pace with the cost of that, definitely there will be an element of pricing, question whether the pricing is good or bad. And if you look at the healthcare industry statistics, what is a metric called revenue per operating bed, how that is increasing and how health insurance premium has increased. I leave it for the audience to kind of compare these two and come to a conclusion whether the pricing is increased. Having said that, there are some real realities that we are operating in a country where there are different segment of consumers. For a segment of consumer, I feel the pricing is not more. The pricing is right. How do we solve the experience problem? That is definitely a problem. To the extent it is a reality, to the extent it is a perception, it doesn't matter what's the ratio of that. The fact is, as an industry, we have to solve that problem. Okay. But for a segment of consumers, that is not, suitable. And some of them are structural issues. For example, all our products allow all the benefits to be experienced at any hospital in the country without any restrictions and limitations. You go to any mature world, there are restrictions, there are some limitations, there are some responsibilities put on the consumer. So I think it's a collective job that we have to find and structurally look at what is creating this whole issue of, on the one hand, consumer feeling the price is more, on the other hand, the insurer actually finding the price is not enough because there is an operating profit issue. There's also a related issue of consumer experiencing that they're not necessarily getting the benefit that they were promised. So there are some structural issues, and one of the element in the whole ecosystem that has to be brought in seriously into consideration is the healthcare industry, where finally the service is delivered, and finally where the experience is, is to a large extent given to the consumer, and finally where the cost also matters. If we don't solve the problem together, all of these 2-3 issues, I don't think so we'll come to any conclusive answer on how do we really solve this dilemma, because I kind of clearly see segments. For some segments it is okay, and for some segments it is higher. In fact, I believe for some segment we are underpricing clearly. So it's a segmental play. Who can afford? I mean, we see in every product line, consumers are willing to pay. People pay for business class, people pay for economy, people pay for premium economy. It's not that the cost of the provider is actually significantly varying in that, right? There's an element, and by definition, in insurance, there is an element of subsidy that some segment will have to provide to another segment which actually cannot probably afford it, or where the need is slightly higher.
Rightly put. Rakesh, to you, we have seen traditionally that in insurance, the investments are typically coming from the strategic investors who are there for long term and all of that. But of late, what we've been noticing is there's a lot of momentum from the private equity side. There's also a story of consolidation. How do you see this entire M&A in insurance and its resultant impact on the industry in terms of more consolidation, or maybe it'll be a shorter kind of investment from people?
So, thanks, Nitin. I think given under the backdrop that this is like 25 years post-liberalization, you have now maybe 50, 60 insurance companies, few more coming in the pipeline. There is a reasonable amount of people present to really carry out a business model. And my sense is that, M&A or consolidation or, raising money from different type of investors is bound to happen as the industry matures, grows in size, and the needs continue to grow appropriately. However, I feel that, in the current next 3 to 5 years, because this is a transition kind of a mindset, and where the regulators are also asking a lot of people to list. The companies create credibility by listing also, not just by doing the insurance business. I think there is clearly a case for people to realize that M&As and all will be done with an objective of reshaping the industry. Is to really say, how do you really build better synergies, better operational efficiencies. You will also see maybe different companies coming with diverse strengths and coming together and align for a common objective. And all these are, reasonably well laid out in various other industries across the world. So for us also, this is going to be the reality. And I think it has to be meaningful, it has to make sense. The real truth is not about carrying out a transaction, the real truth is to make it work. And this is where, the crux lies. I personally feel that, the Indian ecosystem is very adaptable. To that extent, raising money from private equity has also contributed to efficiencies. I'm sure all the people would agree. My illustrious friend, Sarbvir will say he got listed. He raised money from various private equity, of course, during the case, but they are also got public shareholders. I'm sure, they have done very well out of that. All these are becoming actually tools for improving the efficiency, improving, I would say in various ways, the performance of the insurance company. And we ought to be seeing this positively. Having said that, consolidation should not lead in a growing country like India. It should not rid people with ideas. There should be healthy competition in the long run. And people should benefit out of that. The consumer should get different products, new products. They should get a service environment which should be, forward-looking. And to my mind, all these will define actually whether a particular transaction is good or bad.
So, in spite of the industry growing at a rapid pace, we still see that question of the penetration density. We're still short of making people insured. What do you think? What can be changed radically in this space to grow this business more? Do we need more distribution arms? Do we need a different kind of technology? Do we need different ways to go to customer? Or do we need different kind of products or more lines of products? how do we really look at the growth in this segment?
I would say two things. First of all, I think we have to be patient, because what happens is that if you see, insurance is a function of the middle class. And as the middle class will grow, and I think the best way to think of it is that the number of people who have, let's say, income over $5,000 annually, or some, you can use some numbers. But let's say if you take 5,000, and as that number of people increases, you will find that the penetration of insurance will also be, there will be some lockstep with that. See, because first we have to overcome the basic requirements. I mean, you cannot buy insurance, without overcoming the basic requirements that you have. You need to have some assets which you want to protect, etc., etc. So I would say that yes, we can, sometimes we get into the doom and gloom of the present, and we feel that perhaps there is no future. But I would actually say that in a macro sense, as the middle class will grow, so will the industry. So I think we are lucky to be in a country where that dynamic will play out. I think we have to have the faith. We were talking before this panel, and we said that in 2001, the whole industry was GI industry was 10,000 crores. And I think this year will be 3.5 lakh crores or whatever. So I think things do happen. I'm sure if I told somebody in 2001 we'll reach 3.5 lakh crores, it must have seemed quite unbelievable. So that's my first point, that yes, you have to be patient. We have to go through with the whole thing. I think the second thing which we have been discussing, I think, is that we have to make this product desirable. We have to talk of the good things, because also what happens is that when one claim is not paid, that matter is discussed obviously, in a very social way, because today with social media, everything is sort of, everybody knows everything, right? Whereas on the other hand, a lot of good work has been done. I think the health insurance industry during COVID paid significant claims, right? Without raising premiums, without doing anything. So I think we have a lot of positive examples, and I think those positive examples also need to be played out. That yes, there are these things that are happening, there are very good things that are happening, these are the people who have benefited. So to my mind, the answer is, as I said in the first part also, that we have to create demand, we have to create desirability of the product. And the desirability will come from the utility, that if I pay certain money, I get something in return. There's a concept in life insurance of living benefits. I think you need to provide something which is not there, if it's not just the end, right? It's just not the negative connotation of the event, but something positive. I think in health insurance, we have a lot of examples. I think, Mayank has been leading the way in terms of talking about wellness and how we can do more preventive stuff. So I think there are a lot of positive sort of associations with insurance, because actually if you think about it, I think the member sir in the morning said that it's a way of managing your balance sheet, whether you are an individual or a corporate. It's a way of managing or smoothing the volatility of your balance sheet. So I think it has a very positive role to play, and I think more and more explaining to customers. See, it's a very hard task. I was talking to a FMCG person once, and he was giving me the example of, this dishwashing liquid and dish cleaning powder, because he said initially in India, that historically everyone has always used ashes to basically clean. And it was very difficult exercise to explain to people that this is better than ashes, because they said, things are going fine, we can use it. So what he told me was they went around house to house, district to district, explaining this. So my sense is that the responsibility is on us. We all have to collectively really go out and explain this in a very, very granular manner. And as I said, the macro is with us, the micro will also come as we go along.
Correct. Mike, there has been a lot of talk and investment, especially on the emerging technology. That's now the household names called artificial intelligence and machine learning, or blockchains, or generative AI, all of that. How do you see their role in insurance, and what parts do you really see that the industry can benefit?
Yeah, I think it's important, right? Because if the environment around us is changing in terms of emergence of new technology, whether it's, you refer to a few of them, there are many, many more which are coming up. I think as an industry, it's extremely important that we also are there at the forefront, thinking of how we will kind of assimilate this into the way we either operate or interact or engage with our different stakeholders, who are that, whether it's a distribution, whether it's a consumer community. So it's definitely happening. So let me try and give you a couple of concrete examples, right? at least in our business, we talk of kind of two kind of, if I may call, promises or kind of benefits that we try and provide to consumers. One is the benefit of encouraging consumers towards a better health outcome, because we believe that that's what will actually lead to better health for us also as a company. And the second one, of course, is the whole traditional kind of benefit of if something happens, then you know, insure that or protect that cost. In both areas, there is a clear usage of emerging technology. In the first one, what does technology typically lead to, right? One of the biggest area is creation of data. And then what do you do with that data, right? You know, you use that data to reduce cost, improve experience, create much larger kind of funnel for, like the previous question, penetration, etc. Using technologies like today, digital health technologies like face scan, finger scan, and there are many other tests which can be done at, using technology at a in a very different manner than what used to be done earlier. Engaging consumers to kind of give you access to more data. We now have a very large volume of consumer health data. We are able to use that to then risk stratify our consumers according to health, and then using technologies like AI and all, predict at what stage is a health event likely for that consumer. And using that, then intervene either ourselves or through a set of very smart, I must say there's an emergence of very smart health tech ecosystem that is happening in India, InsurTech ecosystem, and especially in the health area, I must say. We partnering with them to actually somehow create opportunities for consumers to use that towards a better health outcome. And we are seeing very encouraging outcome for that. So that's one piece. And as more technology to kind of create more data, use that data to kind of intervene and then create better health outcome. This can actually just completely, to my mind, reshape in the way consumers actually imagine health insurance industry. The second one is in the, let's say, the traditional area of, let's say, operating the traditional life cycle of bringing consumer in, service, engagement to claims. Let's say in the area of claims. Today, when I my South African partners, they're 95-96% of health insurance claims there are paperless, humanless. In India, till about 2 years back, it was not even 0.96%. But today, because of emergence of some, again, very smart InsurTech players and solution that you can kind of bring in-house as well, there is an opportunity to completely reshape the claims experience, especially now with the regulatory expectation and right expectation that, you must really bring down the time for, let's say, a cashless or other claims. We're able to use technology to not just, digitize the whole claims, but adjudicate the claim. So already about 40-50% of our claims are actually machine adjudicated. Now it doesn't mean that, we leave the machine to adjudicate, because it's important that that's, till the whole ecosystem gets matured, the way data flows, etc. today, because there are different formats in which, medical reports, etc. come in. All of that is suddenly now completely changed. It reduces time, increases efficiency, and of course, even if there is someone who's looking at that data again and doing, let's say, a quality check, it still gives a significant better experience for customer to solve, let's say, one of the problem that we spoke about earlier. Similarly, in the area of how you manage large sales fleet, etc., using technology and creating data and then leveraging the power of AI, you can predict what intervention this salesperson needs at what point of time, whether it's training, whether it's hand-holding, whether it's and create recommendation for that person to kind of add to the enterprise that he or she brings in. I think there are lots of use cases that are emerging. Jain AI itself, we are able to now listen. Jain AI is able to listen to every call of ours and give us half a page summary of what exactly was the summary of that, what did consumers say, what should be the intervention. If humans were to listen to all those calls, it's like, imagine the problem. So I think it solves the problem of scale, it solves the problem of accuracy, and of course cost, etc. I do wish that this becomes a much more deeper part of how it is getting integrated into in our normal operating cycle. But huge use cases, I must say.
So I think thanks. So what Mayank said is that it's eminent and they have been having a lot of use cases. What's your view if these kind of technologies are used more and more in the organization? Uh, Probably you'll have to go through the upskilling and reskilling of all the people who have been in your organization for long. How does this impact externally and internally, especially internally? Because externally we think that consumer is adaptive of all of these changes, but internally at times there are organizations which face challenges to become more digital.
Yes. So as the digital landscape changes and so many changes and transformational changes, like Mayank said, on the digital side, I mean, any insurer who is in business has to shore up and start taking measures to see that both the internal and external aspects are taken care of. So even in our own perception, this journey has already started. We are internal IT systems and processes, we are, changing in a big way. We are also trying to adopt this latest AI technologies to ensure that our customers get the best in class service in comparison with any other any service that any other insurer in the country can do. So this requires a lot of change management, because as you rightly said, we have employees who are who are on the verge of retirement, few years from retirement, and they find it difficult to adapt to technology as easily as our new recruits. So yes, there is a constant upskilling process that's required, and that's going on. We have set up an internal training vertical within our company that focuses only on digital and other skill set trainings for our employees round the clock, for all our employees across all our offices in the country. And I believe that in the near term we would be able to achieve that level of skill set development that is absolutely precise for our scale of operations, with a totally committed intent to see that the customer gets that technological advantage that is there in the ecosystem today.
So, what we have heard till now is that there is a challenge in terms of pricing, but there are a lot of opportunities in these new technology, and we are investing in both of these places. Now, if we keep investing in both of these places, how do you see the overall challenge in terms of managing the bottom line? Because when we see this entire investment in technology, which is in a way endless, you invest today and after 2 years it gets obsolete, and again there's something new comes in. How much is it repaying to us in terms of just mimicking the next door?
No, this is a very tough question to answer. Obviously everybody wants to be forward looking. Everybody realizes technology is the way to achieve that, most of your forward looking goals. Data analytics, this is not just about collecting them, it's about nurturing them, creating various, models on top of that, continuously playing like a playground. All said and done, technology cost in our country, as I see good companies are now investing close to about 1% of their, gross premiums, which to my mind is huge. Of course, growth gives you an ability to optimize, but the way the new things are emerging, the way the customer expectations are coming, the way people feel they can improve out of this, all this is leading to maybe an incremental allocation. Having said that, the long-term business goal should not be missed. I think the vision of the company should not become tactical. They still need to realize that it's the consumers who need the products. They need to really appreciate, the service. Many of us, in India, I'll say classical few things, we are a 1.5 billion, country. It's not like any other country which, which are most of the other countries we commonly refer to, like US also will be like 1/4 of our size. But the rate of growth of income, the rate of growth of population, all these are multiple dimensions which are very, very difficult for India to manage. The second thing is in India, the classical problem for us is, which somewhat Sarbvir alluded to, we try to give everything one size fits all. We have a GST mindset. Anybody who buys the packet of chips will pay the same tax. Whereas we ought to have an income tax mindset. The lower end of the cadre will get some extra benefits. The higher end of the guys can afford to pay for that. The government revenues don't fall in income tax as well as in GST. But the approach to the two tax should be the approach which we need in insurance. And in my view, You know, there is a huge segment of people in India whose per capita is more than $5,000. Right, sir? You know, let's not get swayed by averages. You know, these averages are misleading. Most of the insurance, like I'm an insurance company, I did like 13,000 crores of premium. My retail customer base is about 1.5 million. 1.5 million in a country of 1.5 billion. For me to double, I need another 1.5 million. Or if I sell another product, even this 1.5 million is sufficient. I may sell both motor and health, then 1.5 million is sufficient for me to move from 13,000 to 25, 26,000. You know, some of us need to really quantify the long-term goals, really put your mind to that. Now, obviously, when you deep mine a customer, you'll have a certain approach to innovation and technology. If you want to play the India story, if you want to really go down to the hinterland, you'll have an approach for that. So I think technology, in my view, is a necessity which needs to be harnessed with the right vision in mind. Companies which are able to do that will really have a very different growth path and benefits. And to my mind, an equal number of companies need to be worried about failures. Technology is not a sure recipe for a successful outcome. It is a difficult choice to make, and hanging on also to certain things can also, inertia is also no longer an option in a country like India, which obviously aspires to protect everybody, you know, in a prospering backdrop.
So, we have been seeing a lot of involvement of this insurtech or fintechs, or we can call it a different kind of tax, which they are partnering with insurers, right? How do you see this entire landscape evolving in terms of more, which can aid more to distribution than anything else? Because like Mayank has touched upon, or Rakesh has spoke about, it's all how you can really improve your products or underwriting or all of those things. But externally, still the problem remains same, that how do I reach out to more and more customers? What do we need there in terms of these? Should there be more partnerships? Should there be?
I think we need a lot of everything. I think what you are saying, I don't think there is one answer to say that this is the only dimension. I think we probably need more partnership, more ways. I think in the morning there was a lot of discussion about how can we get deeper into the country, what distribution channels make sense, what is the cost of those distribution channels, etc. So I think we need answers along many dimensions. And I think if you ask me honestly, one of the most important things we need is many experiments, because it's very hard to predict today that this is the model that will go here or this will go there. I think you need to have more experiments. And one of the models that has been successful in the world and might be worth considering for India also is the MGA model, which is equivalent to, like I would say, NBFCs in the financial sector. And MGA is simply a distribution arm which has some underwriting capability, which is under the aegis of an insurance company. So everything finally is decided at a broad level by the insurance company, but the MGA has the ability to settle claims and do underwriting. And what this can lead to is many more different types of players. Somebody may take a view, a geographical view, they may want to be in the northeast, somebody may want to go deeper in south, somebody in, let's say, in the western states, somebody may take a product view. Like for instance, cyber insurance, for instance, still is a, almost negligible part of the overall market, especially in retail. Now, could we have some small companies which only focus on cyber, or various other types of insurance? So if you see, gold loans originated from a similar structure. There was a NBFCs which started gold loans, and now of course banks, everyone provides gold loans. So I think what we really need is, we need to have a opening of the sort of mindset and architecture to allow different types of experiment. Because honestly, I don't think anyone can sit here and tell you that this is exactly what will work. But if different players will try different things and in different structures, then my sense is that things can be solved. Because finally the creativity of individuals is what leads to big outcomes. And if we can allow that, then I think things will move in the right direction.
Sure. So I think we have come to the almost at the end of the session, ma'am. One last question. As an industry, we all know that the public sector especially is spending a lot of money in terms of technology, digital, to improve processes, bring in efficiency, productivity. All of those things are done the way the private sector does. But in terms of customer perception, the customer still thinks that the public sector organizations are not digital, or they are not customer savvy, or they are not customer service oriented. How are you changing, or how do you plan to change that perception? Because at the other end, we know that, and we are privy to that, that you have been spending a lot of time, effort, money, and improving all of those things. How do we really go back to customer and tell them that it's happening?
First of all, I do not agree that public sectors are viewed in a different way by customers. It is proved by all the recent surveys that have been done by different segments and stakeholders in this market. So both in life and in non-life, it is the public sector that is number one.
Yes.
In customer, both settlement and the ratio of claims that are settled and settled in terms of amounts also. So that I will not agree. Secondly, even with that in play, it is happening because the quantum of claims that we handle is simply huge as compared to what any private sector handles in this country. So obviously the problems associated are more. The ratio of claims that could land into controversies and customer introspection is more than what it is for private sector. And therefore, yes, there is a lot of customer perception around it. But having said that, we are constantly, continually trying to engage with our customers, trying to find out, where we have gone wrong in terms of health, which is a priority sector for us. We have introduced a lot of audits in our TPAs. We are using fraud, detection technologies to ensure that as far as possible, these things are detected, and obviously the statistics then gets improved, and that of course reflects on the pricing that we make for our customers. So in all these aspects, a lot of work is going on, and public sector or private sector, I think every insurer in the country today is investing heavily on technology and trying to find out that right mix of technology and physical intervention that will bring in the best customer delight for us.
Thanks. So, because the whole idea is that, yes, you are seen as a good service player. The question was more around that the digital perception, and I think that's improving. You're right. You have been doing a lot, and I think all other insurers are doing the similar manner. I think with that, I think the key takeaways from today's session, what I see is that the future is bright, and especially with a lot of technological advancement, the product investment, the pricing corrections, all of that is needed in market to grow it more. Thank you very much for your time, and thank you for being a lovely audience. Thank you very much.